Are you interested in making weekly or bi-weekly income? If you continue to watch this video, my assumption is that the answer to that question is yes. Options world is a fascinating world where you can use different strategies to make a lot of money on your investment. And one of these strategies is called a wheel strategy. A wheel strategy in essence is a combination of two strategies, which is a cash secured put. You enter a stock at your desired price, and covered calls where you sell the stock at your desired price. But if that was the bottom line why you came in here for, there you go. Wheel strategy is what we're going to talk about in today's video. So if that is something that you're interested in, keep watching, hit the like and click on subscribe. Let's get this rolling. So for our example, we are going to take a look at Apple as one of the stocks where you will be selling a cash secured put. Just remember that whichever stock you choose, and if you're selling a put, you will need to have that much amount of money as collateral so that they can buy the stocks. So in our example, let's say I come to this page, I click on trade Apple options, and I'm going to be selling a put. So for November 26th. Now these are the premiums that you will get per stock. So for 157.5, I'm getting about 91 cents, which is $91, because 91 cents multiplied by 100 is $91. So if I sell a cash secured put for $157.50, I can get about $91 as a premium. So effectively, for an investment of $15,750, my cost basis will be $156.59. So the second part of the strategy is called covered call. So let's say the stock price came to below your strike price and you were assigned Apple at $157.50. And also you have earned about $91 as premium. The next leg of this strategy for the next week will be actually using a covered call to sell Apple back at $160. That's what we'll do. But before I show you the example, let's understand what covered call is. So the term covered call refers to a financial transaction in which the investor selling call options owns an equivalent amount of the underlying security. So in our example, we already own 100 shares of Apple at $156.59. I have also covered this strategy in much more detail in this video for covered calls for beginners. So definitely check that out after this, because this is going to be a very quick summary on how to run covered calls. So coming back to Robinhood in our example, we'll go back to Apple, and now remember that you have a strike price of $156. In our example, we chose November 26th. In this case, we will go with December 3. So then you will sell a covered call. In that case, we want to sell a covered call at $160, which will be about $2.50 above the current market price. In that scenario, you will get about $320 as premium for selling the covered call. So you're making a profit about $310 plus $320 for the premium. You're making $630 on an investment of $10,690, which is about 4%. In a span of 2 weeks, you have earned about 4% on a transaction for Apple. Now, this is not a guarantee that every single time you will run the strategy that you will get 4%. Some transactions you may even get less, some transaction you may get more, and in some transaction you may not be able to run the second leg of the strategy because, let's say in this example, Apple falls to $140. So in that case, you will not be able to run a covered call. So always keep those things in mind. If you did not get a chance to watch my conversation with Guillermo from Finance ABC on covered call and cash secured put, I highly recommend that you watch it. I'll put the link over here in the description. We had a very good conversation on who should run covered, and is that something which beginners can take advantage of. I have shared some of those key tips, and we have learned a lot from Guillermo on how he runs covered call. So I highly recommend you check that out. If you got any value out of today's content, click on the like, hit on subscribe, and ring the bell notification. I will see you next time, investor family, but don't forget to invest for tomorrow.